While some online bullion dealers continue to charge almost $4 over spot for U.S. Mint Silver Eagles, SD Bullion is selling 2017 Silver Eagles for just $2.29 over spot on any quantity. Again, that's just $2.29 over spot for any quantity. If you haven't joined the over 40,000 precious metals investors by making the switch to SD Bullion, what are you waiting for? You could save hundreds or even thousands of dollars on your next order. SD Bullion, the lowest prices, period.
Hey everyone, this is Elijah Johnson with SilverDoctors.com.
And with us today is Bill Murphy from the Gold Antitrust Action Committee and La Metropole Cafe. Bill, thank you so much for joining us today.
Great to be here, EJ. Thanks for having me.
All right. Well, recent price action in the precious metal markets is actually up. Silver is up $1 and gold is up about $100 from recent lows. Now, we always have you on, Bill, to kind of give us the view behind the curtain to see what is really going on. You report a lot about the gold and silver price manipulation you think is happening. And so did you want to give our viewers an update on and kind of a view behind the scenes of what is really happening in the precious metal markets right now?
Well, I wish I was that clued in because it's usually a mystery. The only thing we do know after 18 years of doing this, that the gold cartel is out there constantly doing what they can to suppress the price of gold and silver, which is why the price of silver is so ridiculously cheap, and gold should be at $3,300 right now if it kept up with inflation. But to me, the real key right now is what's going on in the silver market, because JPMorgan, in my opinion, they drove the price down, as you know, from $18.50 every single day for over 3 weeks and hit 17, and then all of a sudden in the open interest is still way, way up there, and we think that they were trying to cover because I believe, if my information is correct, that the silver physical market is finally, after years, drying up, and JPMorgan has to orchestrate a covering program. So we'll see if this is true or not. You know, this was when silver was put out a unusual thing for me on a Sunday when the price was around $16.35 and it's up to $17.10 now. Now I have no idea if it's going to mean anything, and not to get on too much here, but basically in the last 3 days the volatility in silver has changed dramatically, and we'll see if that continues, because if in fact we're at this tipping point, which I like to call it, then the price is going to continue to be volatile, and at some point take out 18.50, then 21, and then head towards 100. But we got a ways to go here. But the change in volatility could be a big, big key that what we've been waiting for years now is finally here.
Now, you mentioned how JPMorgan has been manipulating the price, and we've talked a lot about this on our show, and you've given us a lot of insights about this. Recently, it's been rumored that JPMorgan is actually stockpiling physical silver. Do you have any insight on this?
Well, you know, we know that the numbers on the COMEX reports are quite high. We don't know if it's for JPMorgan or for somebody else. What we do know is that that JPMorgan let the silver price go to 50 in 2011. The open interest was only 133,000, basically that all the way up, and now it's 100,000 contracts more than that. And then they went into action, and in my opinion, that they were buying silver on the way up and not selling in the futures market. And then they went bananas, selling derivatives, futures, and taking out puts and all these kinds of things, and made a fortune on the way down and used the physical silver that they accumulated to hit the market whenever they wanted to. So now it's, 6 years later, and hopefully we've got a different ball game. And if in fact we are at that tipping point, then they're going to know that they won't have the physical supply to support this operation down at these levels. And what they have, they're going to use to protect themselves while they get out of the rest of their futures positions on the short side, which we think they have been doing based on reports.
It seems like if that's what they're doing, they're kind of preparing, as you're saying, kind of for a move towards the upside, if I'm hearing you right?
Well, you never know, because, the gold cartel and JPMorgan's, the Fed banks, and it's so complicated. And as I mentioned before, we know for some reason they were forced to let it go up in 2011 or had this plan in mind that I just mentioned. We just don't know, but we know that they're silver and money to make it. The money they can make on that relative to all their other financial investments and what they do, and and the inside information they get from the Fed and the government, it's important. Don't get me wrong; it's a lot of money, but it's secondary in nature compared to holding the system together and what a substantial rise in the gold and silver prices might mean. We know they've been at this forever, and we're just hoping that the end game down here is close at hand.
Now, I'd like to get your perspective on how the political turmoil right now could possibly impact the precious metal markets. It seems like just a couple of weeks ago, everyone was worried about World War III, and now the big worry is about political intervention with the FBI and possible, maybe impeachment of Trump in the future. How do you think this will all play out, and how will it impact the precious metal markets?
Well, as far as I know, right after the election, the next day, I said they're going to ramp up the stock market with what they were doing because they're petrified of Donald Trump and his presidency, and it could foul up all the things that they orchestrated all these years, especially of late, to hold the market together. And, we saw just last week what could happen with President Trump as a way of, getting himself in a fix. So, it's really hard to say. But for me, I've never seen a geopolitical event mean one thing in 18 years, nothing. Because it's always a lot of talk or whatever it is, and then it calms down. I think the one major exception, obviously, was 9/11. That was huge, to put it mildly. But basically, a lot of this stuff is just talk and posturing, positioning, and so on. Of course, if it ever was going to go anyplace, it would be a big deal. But I've never seen that be a major factor in gold and silver moving up. And however, if President Trump gets himself in trouble and some of these things come out that present legal issues, that could become a big deal.
So would that impact the precious metal markets, in your opinion?
Oh, yes. I mean, just because it's fear, and especially today because with what Bitcoin's doing and what real estate's doing and art's doing and the stock market's doing, all assets are going really well and performing well and jumping way up there. And gold and silver are just pitifully low, artificially low prices compared to the gold cartel. So the dichotomy, the contrast is extraordinary. And as these things play out, and I think we've turned the corner here, people are going to jump into gold and silver, whereas right now in the United States, I would say the interest and sentiment's about the lowest it's ever been since I've been doing this. And it's because of the relative performance factor over more than half a decade now, and it's really has made an impact.
All right, well, that transitions nicely into this first viewer's question from William. He's saying that, a lot of people are saying that the stock market is overvalued, the bond market's overvalued. You talk about Bitcoin and art. Now, if we're going to see this kind of, crash in the stock market in the future, he's wondering, why wouldn't gold and silver plummet alongside the stock market? I mean, that's what we saw at the, when in the 2008 crash. At first, gold and silver fell as well. So why do you see that gold and silver will go in the reverse direction?
Well, I'll leave what the stock market's going to do to smarter minds than mine. And to answer the Williams question, sure, it can happen. You can have a liquidity crisis, and gold and silver, could get nailed early. But they're already so cheap compared to these other assets that there's a very good likelihood that the opposite will happen. And regardless if you have an initial slump, I mean, they're going to have to, put the pedal to the metal and in terms of money creation and all this thing, if we ever do get a situation like that. And what I like to focus on is gold and silver in the sense of inherently, I can't stress this enough, how cheap they are. I know my friend John Embry of Sprott Asset Management thinks they're probably the cheapest they've ever been in history relative to other things, and I couldn't agree with John more. And I think from a risk-reward standpoint, well, just when people in the United States are paying the least attention, this is when they should be paying the most attention, and especially silver. If we've hit this tipping point, first we've got to get above 1850, but 21's the key. You're going to see historic market action and volatility like we've rarely seen in a market, if I'm correct, and maybe I'm not, but it will be something to behold once this thing gets above 21.
Now, you've talked a lot before, and we've talked on the show about the gold-silver ratio, and it seems like, the historic ratio for gold and silver is about 10 to 16 ounces of silver to equal the value of 1 ounce of gold. But right now it's completely out of whack. It's about 70 ounces of silver equals the value of 1 ounce of gold. Now, Sam is wanting to know about, do you see it going back to its historic ratio? Or he's making the case that maybe it could stay around 70 to 1 because that's around the cost ratio of mining it right now. It costs about $20 to mine 1 ounce of silver and about $1,300 to mine 1 ounce of gold, he says. So, first of all, where do you see the gold and silver ratio heading? And second of all, if you see it going back to its historic ratio, why do you think it would do that? It seems like if it's just about the price of mining it, it should stay about where it is now.
Well, good points again. Just recently it was down, I don't know, something like 68 and change, and then it just went up above 75. Now it's back to, I think, 74 or 73 and change. And my simplistic answer would be, yes, it's going to go back to the historic norm. And the reason it will be is that the bad guys, as I will call them, the JPMorgan crowd and their allies, have gone through so much physical supply to create this situation. It's what we like to call silver is the gold cartel's kryptonite. And they're petrified of losing control of this thing and what it could do on the upside. So that's the reason the silver open interest is, not far from historic all-time highs, where gold is not too far from multi-year lows. And the dichotomy there, again, the same word, it's just extraordinary. And this is what they've had to do to keep things at bay. And I'm thinking, as mentioned earlier, that Morgan realizes they're in the process of hitting that tipping point of physical supply. And they've got to get out while they can. And that's the thing, is that if silver does get above 21, and if, in fact, the gold cartel eventually, they all realize they're going to have to cover, who's going to sell? Because right now, Morgan's attracted some spec selling, according to the Commitment Traders report, and quite a bit of it. And if all of a sudden we know what will happen if the price turns, they'll go from short to long and start buying again. Well, who's going to sell if we've reached this tipping point? And that's why it could get chaotic if silver gets above 21, as some of the other people that have been making a fortune all these years on the short side decide to cover. And that's why I think you're going to get the silver price ratio go back to the norm of historically, like a lot of other markets did, go back to where it was. Because people don't realize right now how undervalued silver is. I mean, heck, it was $50 6 years ago, and that same 37 years ago, and it's 1/3 of that highs. It is the cheapest thing on earth, and we've been waiting for this thing to play out, as mentioned in what I just said, and it hasn't happened yet. And we're hoping we're here now, and there's some signs of it. You've got some recent increase in volatility, as mentioned, the past few days, and we'll see if this continues. It may not, but there are definite signs that something of serious change is in the works.
All right. Well, Bill Murphy, thank you so much for joining us today. Before we let you go, did you want to remind our viewers where they can find you and any last thoughts you had?
Well, sure. On Metropole Cafe, you can sign up for a 2-week free trial. And my colleague Chris Powell does a great job at Goddard.org, and he stays on top of things. We're both going to be out in Vancouver to see a bunch of friends we haven't seen in a while this coming weekend. We're looking forward to that. And all I can say is that it's been a tough slog for the entire sector and industry these past years, and there's a good chance that we've reached a turning point, and hopefully that's the case.
All right. Once again, Bill Murphy, thank you so much for your time.
Thank you, EJ. Bye-bye.